Hey guys, welcome back to the Value Investor Show, and here we go. Super investors are buying heavy, and the GOAT himself, Warren Buffett, has invested in United Health Group. I cannot explain my happiness, I cannot explain how I feel. There have been so many haters over the last few months where I have been advocating for this stock that have said that UNH is a falling knife, that UNH is a business that shouldn't be invested in, and since Warren Buffett came out with the 13F filings, it feels like sentiment has changed, has shifted for the better. Now for today, I know a lot of you are asking, okay, Warren Buffett invested, but what happens next? And for today, I want to dive into firstly, the buys that Warren Buffett made apart from UNH, and also the sales that he has made explained. I also want to dive into why Warren Buffett has bought UNH. Then we want to look at other super investors as well that have bought United Health Group and see where the stock goes from here. I want to share my thoughts on the intrinsic value of the company and my final thoughts generally for the company moving forward. I have been buying and I have been advocating for UNH, and a lot of you that have been subscribed and have been watching my videos, and I see you guys commenting, liking, and I know that some of you are in this as well, and it feels like we have finally had a big break, even though nothing fundamentally changed with the business. But the fact that Warren Buffett, the greatest value investor of all time, invested in UNH, but only the fact that Warren Buffett, the greatest value investor of all time, invested in United Health Group just makes it worth it. It shows that he has seen something that I have seen as well, that probably you guys have seen as well, that this stock has been undervalued for a very, very long time. I've been posting about this stock since my first video. I have been posting about it for the last 1 month and more. I have been posting on X and couldn't have done it with all your support. And it really feels like there is this shift in sentiment for this company. So Warren Buffett added 1.6 billion worth of United Health stock in his portfolio. Now I have to remind you guys that Warren Buffett had 300 billion in cash, and he has been a bit more aggressive this quarter. He also has been a bit more diversified. He has reduced some of his stake in Apple, in Bank of America, in Davida Healthcare Partners, and has entered new positions. We haven't seen Warren Buffett enter as many positions as he has for the last 3 years. And so I think this is a positive because it shows that Warren Buffett is seeing some opportunities to either firstly increase some of his position, add on his positions in some of his stocks, or enter new opportunities, which he has, and with the biggest one being United Health Group. And since the 13F filing came out, the stock was up 12% on Thursday. It was up 12% pre-market, and it's now roughly around $300 before market today. And it feels good to just see Warren Buffett aligning with my views, aligning with the view that this company is undervalued, that this company has a moat. It is very competitive, and it is the biggest market shareholder of the healthcare industry. I've made some other predictions as well in my channel. Firstly, that UNH is undervalued, which has been validated by Warren Buffett. Secondly, that Decker's Corporation deck to double beat earnings, which it did. I also made the prediction that on running, as many of you know, is a piece of a company. And if you guys have seen the earnings report that they came out a few weeks ago, you will realize what a great company this is, growing 38% year on year, excluding FX changes. And also I did say in my Twitter that AMD will get at least 150 this year. And to be fair, it has been outperforming as well. I'm up almost 100% on my AMD position this year alone. I have seen a lot of misinformation on X about saying that Warren Buffett bought at the low of UNH, but I have to correct people because I feel like there's a lot of misinformation going. Now you have to understand that Warren Buffett, as well as other funds, when they disclose their 13F filings, the day that they disclose the filings isn't the last day of trading. For example, since they have posted their second quarter 13F filing, the positions that they have listed have been made between two dates, between April 1st and June 30th. That means that Warren Buffett hasn't disclosed a position that he had bought during the last few weeks when the stock was trading at, the low 200s, but rather he has made a position between 270 and $580 a share, so somewhere between here. That doesn't mean that he didn't buy more in July when the stock was beaten down even further. And to be fair, I would expect and I would see Warren Buffett disclose an adding to his position in the Q3 13F filings. But we cannot know for sure, and we cannot know right now. We'll know in 3 months whether Warren Buffett has added more to his position at this price point right here. As a value investor myself, I have added the stock during this time over here when it was trading at 300, and then I added more of UNH when it was trading down at the low 200s. So in my mind, if I do see Warren Buffett add more to his position, it wouldn't be a surprise. But with that being said, we have to wait and see whether Warren Buffett has bought more. Before we dive into the rest of the video, I want to thank today's sponsor, Fiscal AI. If you're serious about investing, this platform is a game changer. It gives you beautiful, clear graphs with all the KPIs you care about in absolute numbers and percentage changes. It has powerful forecasting tools so that you can project performance and even calculate a company's intrinsic value. It has industry benchmarks so you know exactly how a business stacks up, and it has detailed equity research papers with everything you need. Above all that, it's all integrated with AI so you can leverage AI in every part of your analysis. This is honestly a no-brainer platform. I use it every single day, and for a limited time you can get 15% off using my link in the description and pinned comment below. Don't miss it, sign up now. Now, as I said, Warren Buffett has also bought more stocks, but he still has more than 270 billion in cash from his sales and from his existing cash position. Now, he has increased stakes in also consumer staples like Constellation Brands, which shows that Warren Buffett is also focusing on more defensive sectors or on sectors that provide stability during economic uncertainty, because healthcare and consumer staples tend to be more resilient in times of economic uncertainty as demand for these services and products remains steady regardless of economic conditions. Meanwhile, he has made new investments in 3 home builders and materials, which suggest optimism about cyclical sectors. We have seen home builders suffer the past 2-3 years, probably due to the higher interest rates. So the fact that he is investing in these sectors mean that he is seeing, or he does think, that these cyclical sectors will perform better over the next few years. And these sectors are also very tied into economic growth. So this balance reflects Buffett's approach of hedging against volatility by both investing in defensive sectors but also in cyclical sectors which are tied into economic growth. Another thing that I wanted to flag for these 6 new positions that Warren Buffett has made is price per free cash flow. The price per free cash flow has been dramatically dropping for these companies, and especially for UNH. And we are seeing that Warren Buffett is really investing in undervalued businesses. If we check the last 2 quarters, we are seeing that most of these companies trade at roughly 10 to 15 price to free cash flow ratio, which shows that these businesses are very undervalued, and it shows that Warren Buffett is seeing some opportunities in some sectors that are trading below their intrinsic value, that are trading at very, very attractive valuations. And I think that this is the primary metric that Warren Buffett has been using, because net income hasn't been great for United Health Group. I would guess that net income hasn't been great for the other companies as well, but free cash flow has been a very strong metric for these companies, including United Health Group. And the fact that it has been trading at historic lows made it like an attractive opportunity for Warren Buffett, given also how much fearful everyone has been around the healthcare sector. And this is something that has happened as well in the home builder sector. Everyone has been so fearful about these companies in the home building sector. And again, Warren Buffett saw an opportunity. In fact, we know that one of his most famous quotes was, "Be greedy when others are fearful, and fearful when others are greedy." And the Healthcare Select Sector SPDR Fund, which is an exchange-traded fund that tracks the performance of the healthcare sector index, shows that this has been the lowest point in the healthcare sector over the last 25 years. And this is exactly where we want to be. at a time when there is peak fear and no one wants to be in healthcare. That's when we are hunting for value. That's when I hunted for value and I saw this opportunity in United Health Group. And I showed this slide before in one of my previous videos. And I think this is something that Warren Buffett saw as well. He saw an opportunity in a market that has been beaten down heavily. He saw an undervalued company, and also the fact that United Health Group is that big with that economic moat gave him an opportunity to enter at a very attractive valuation. But Warren Buffett is not only interested in valuation. He does look for durable and competitive businesses, but he also looks for management. In fact, this is a paragraph from their AGM meeting in 1998 where they have said that they don't tell outstanding CEOs how to run their company. They want CEOs to run the businesses as if they own it 100%. They want managers to think about what counts and how it will count it. So essentially what he's saying is they don't take an activist approach. They let managers and outstanding CEOs run their companies, but they're looking for those CEOs that run the companies as if their life depends on it, as if they have nothing else to win apart from long-term value, apart from a longest investment horizon that will return back not only to the shareholders but also to the CEO. And if you guys remember, there was a lot of internal insider activity for this company. A lot of directors as well as the CEO, which I'm gonna talk about, has bought more than 25 million worth of stock as soon as he joined. And that's none other than Stephen Hemsley. United Health Group replaced Andrew Whitty, who stepped down for personal reasons, with Stephen Hemsley in May 2025. And if you guys remember, as I pointed out in my oldest videos, Stephen Hemsley bought 25 million worth of stock when he joined around the $280 to $290 by share price. And Stephen is someone who is quite well established and quite incredibly known, because not only he has been the CEO of United Health between 2006 and 2017 when the stock appreciated 7 to 8 times, but also because the company expanded through significant growth and expansion, including the diversification of its health services and technology capabilities through its Optum subsidiary. He was widely credited with driving operational efficiency and helping position the company as a dominant player in the evolving US healthcare landscape. And this is exactly what this company needs. It needs operational efficiency to drive those margins up, to continue to grow but at manageable levels, and to further increase the value and the efficiency of this company with new technologies like AI and vertically integrated technologies to really offer a value end-to-end healthcare provider that does it all. Warren Buffett knew that this is a CEO that can deliver, that really believes in the company, and someone that has in fact bought 25 million. And I wouldn't be surprised if Warren Buffett was one of his criteria to enter this company was that the CEO buys that much of a stock, because it makes him an owner of the company. It makes him exactly what Warren Buffett said in 1998, which is that the CEO sees himself as an asset holder of the company that he manages. UNH was also bought heavily by hedge funds in the second quarter. As you guys can see, the top 10 buys last quarter, one of them was United Health Group. Others were like Meta, Google, Adobe, which I also covered in one of my videos, and others. But also Christopher Davis added 1 million of United Health shares. If you guys do not know who Christopher Davis is another value investor, someone who wants to look at businesses as if he owns them, and is a very big advocate of value investing, and someone who has looked at Warren Buffett very closely. The 13 filings of last week also showed that United Health was also bought by other super investors as well. And you don't often see a lot of super investors buying the same company. But this time we saw a common theme across super investors, which was a lot of buys for United Health Group. Not only Berkshire Hathaway added 5 million shares, but Doge and Cox also added 4.7 million shares. David Tepper also added 2.2 million shares. Resonance Technology also added 1.3 million shares. And last but not least, Michael Berry added United Health Group as well. So a lot of big names, a lot of the biggest names, in fact, of the investing community added heavily on United Health. And they must be seeing something that I myself is seeing, which is this is an undervalued business that has been trading at a very low price for a very long time. And opportunities like this don't pass by very easily. So you have to exploit them. You have to take advantage of these opportunities when they come. But the truth is, regardless of who bought UNH, it changes nothing about the company. The fundamentals are still the same. We are seeing a company that is growing in terms of total revenues at a 10.7 CAGR growth, and we are seeing a consistent growth in revenues. We are seeing a company that is growing net income as well at an 8% CAGR growth, but there is one outlying figure, which is the net profit margin, which has been declining over the last 2-3 years. And I would urge you, if you don't know why this is declining, to see my oldest videos on what has been going wrong with the company and what has caused the company to trade at this valuation, because there's some underlying reasons and some problems that the company needs to face. And I will not dive into them this video because I have covered them very thoroughly on my other videos. But there is a plan forward for the management. The management has set a plan forward to improve those margins and get them back to the historical averages of 5 to 6%, but it will take time. Like Warren Buffett, myself, I didn't invest in this company for early exit. I invested in this company because I plan to hold it for the next at least 5 years. And this is a long-term opportunity. This is a long-term investment plan. It's not something that will pay off in the next year. If it does, that would be great. But the truth is, there are many problems with this company right now that will need time to be fixed. So generally, post the Warren Buffett news, the stock has been rallying. It has even reached almost $310, and we'll see what happens today after market opens. But although, in my opinion, United Health is still very undervalued, I would not add more after this 10+% pop, because usually after the initial emotional pop, price would retrace back down once the excitement dies down. But I do think that in the very long term, the price will eventually more than double. So I will patiently wait. I still have some cash to deploy. If it drops back to levels where I think is very undervalued, I will buy more. But at this price point, I will gladly sit on my position and just wait and see what happens. So where does the company go from here? I want to talk about what will happen from here onwards. I do think that United Health Group will likely increase share buybacks and reach its earnings targets, largely because they can't pursue more acquisitions. If you guys have been following my videos, you know that United Health Group has been facing a lot of regulatory scrutiny. They have just managed to close down an acquisition of Amedisys, which they have been trying to close for the last 2 years. And it is becoming more and more difficult for United Health Group to acquire other companies because of that regulatory scrutiny. I do think that ultimately they will have to settle, they'll have to pay a fine with all the scrutiny that has been going on, but these things move very slowly. So I do think that from here onwards, the company will reinvest back into the business, buy back their stock, increase the dividend, and really focus on operational excellency rather than try and acquire other companies, because simply they cannot. So before we dive into the valuation for the company, I want to remind you guys that management maintain a 13 to 16% long-term EPS growth target, and they are expecting a return to 10% growth by 2026. And so with that being said, I want to dive into the bear, the base, and the bull case scenario. In my bear case scenario, the revenue, EPS, and free cash flow growth is at 8%, so that's below their estimates, and the discount rate of 10% and margin of safety of 50%. My average intrinsic value for the company is $173, and my 2030 price target is 300 to 500 USD. And also note that in my analysis, I am accounting for the 2025 impact. So I have accounted for lowering net income in 2025, and I am estimating growth from that point onwards. The same goes for revenue. And the important takeaway for this is that even at the bear case scenario, there isn't a downside for this company. That even at the bear case scenario, which I think is very unlikely, There is no downside for this company. In my base case scenario, however, I have estimated still lower than guidance, but even at the 10 to 11% growth estimates of revenue, EPS, and free cash flow, the average intrinsic value with margin of safety is $205, and my 2030 price target is 500 to 700 USD. So my base case, which is likely, but it's still very, very conservative, there is significant upside for the business. There is a double upside for the business by 2030, which takes me to the bull case, which it is a bull case, but it is very likely, where I have estimated a 10% revenue growth because I do expect the company to grow at a slower pace based on what management has said, which is focus on profitability rather than only growth. And they have consolidated some of the business. Again, I would suggest you guys watch my earlier videos to understand what the management has said post Q2 earnings, to understand why I have priced revenue growth at 10% and EPS and free cash flow growth at 16%. So here, essentially, I am estimating that growth is at the upper end of what management has guided, and revenue growth at 10%, which I think is bullish. My average intrinsic value is $260, and my 2030 price target is 700 to 900 USD. And I have to say that my bull case scenario is a conservative bull case scenario. I do think that the bull case scenario here could be very much likely. I have tried to be very conservative in my three scenarios. I want to be prepared for the worst case scenario. But the primary takeaway is that, firstly, even at the worst case scenario, I do not expect to lose any money. In the contrary, I would still be gaining dividend. And at the best case scenario, at the bull case scenario, I would expect the company to triple in size from the current valuation by 2030. So there is an enormous upside with the minimum risk, in my opinion, which is why I have made a significant investment into the business, into United Health Group. So my final thoughts are Warren Buffett buying was the best news I could ask for. It validates what I have been saying for weeks and months, and that this is an undervalued stock and it has a very strong vertically integrated moat in the US healthcare industry. United Health is positioning itself for stronger long-term performance, and at this valuation, I do think it's still attractive. Near-term volatility may persist, but the medium to long-term margin and return profile is becoming more compelling. And Warren Buffett famously said, only buy something if you would perfectly happy to hold even if the market shut down for 10 years. So you guys know what Warren Buffett means when he buys something, and the fact that he bought United Health shows that he will happily hold the company for the next 10 years. And myself, I'll happily hold it until 2030 and beyond, and I do think that this is a very long-term opportunity for myself. Thank you so much for watching. Please like, please subscribe, please comment, follow me on X. Thank you to the recent donations as well, and I'll see you guys on the next video.